Hey, my name's Riley, and Michael and I are super excited to start teaching you this strategy. First off, this course is going to be building on itself, so make sure to watch it in order because if you skip around, things might get confusing. Now, another thing is with this course, you also are going to get a psychology course. And what this course talks about is the strategy and how to execute the strategy and how reading the charts and everything works. And the psychology course is going to dive into the emotions of trading and how emotions affect your trading. I'm a super firm believer that it's not the strategy that keeps a lot of people from becoming profitable. It's actually the emotions of trading and how your emotions affect your trading on a daily basis. And so we're going to dive into what that is, how to fix that, and how to spot it and deal with it so you can actually start to become profitable when trading. Now let's actually get into what we are trading. We are trading futures and specifically the S&P 500 futures, the E-minis, right? And so why do we trade these? And so first off, these don't trade like normal stocks. If you're really new to futures and don't really understand them, I would definitely do some Googling and get some basic research and learning out of what they are. But so first off is normal stocks, they don't trade like normal futures, right? A one increment move here is not a $1 value increase like a normal stock, right? This is called 1 point when it comes to futures, and 1 point is worth $50. And that's what we look to scalp here in this strategy. We look for 1 point trades, and that's how much we are in the market for. We just go up for that 1 point and then we're out, right? And so these points, they actually break into what's called a tick. And the tick is the smallest amount of movement that the market will move at a time. And one tick is worth $12.50, and it's essentially a fourth of 1 point. So here we have that 1 point, and then there will be 3 other increments between there. This will be the 0.5, the 0.75, and the 0.25 here, right? And so that's how the market breaks down, and that's how it moves. And so another reason why we trade the ES futures compared to any other futures out there is because this is one of the most liquid markets out there. And so what this does is because we're scalping, we want to be in the market quickly and out of the market quickly. And so you need a lot of volume to be able to do that, right? And so that's why we trade in a very highly liquid market. And as well, we want to be able to scale up our contracts. We want to start with one contract, but we want to potentially scale up to 10 or higher than 10, right? And this market allows us to easily do that. Now, the last thing as well is we trade a 2000 tick chart. And so normally most people are used to hearing about a 1 minute chart, a 5 minute chart, a daily chart, right? And all those mean is that a candlestick here is for a 5 minute chart, that represents 5 minutes of what the market did, right? Now, in our instance, a 2000 tick chart, don't confuse this tick with this tick. Okay, generally when I say a tick, I do mean the price movement, but in this case, a tick chart measures a number of trades. And so for our instance, for a 2000 tick chart, that means each candle shows what happened over the last 2000 trades in the market. And so what this does is instead of having a candle show up every 5 minutes, right? You have a candle show up every time 2000 trades is created. And so this can cause the market to move very slow if there's not many trades happening, or very fast if there's a lot of trades happening. And so that is how we trade. And why we use that is because it's a really good time frame for scalping that we have learned. And also it allows us, compared to a time frame chart, it allows us to see that volatility and movement in the chart, essentially just watching how fast the candles are printed, right? And so what are some expectations and goals of this strategy? So we're not trying to make really big returns or huge percentage returns, right? We don't even look at percentage returns on what we're trading. We are looking at actual dollar value, and we're looking for a daily income. We're trying to look at consistency over the long period. And so how we do that is we look to just get 3 to 4 trades a day. And what this allows us to is it gets us a good amount of trades to have a consistent income, but also we don't want to go further than that because it causes us to take too many trades that will make us have a lower win rate. And with this strategy, we want a really high win rate. And so to set your expectations up for the strategy and when you could become profitable is it will take longer than you want. It took me over a year of simulated trading to get to a point where I felt comfortable actually trading with real money. You need to start out trading on a simulator with this strategy because you will most likely be losing money right away with it. There's no reason to risk real money with the strategy when you still have so much to learn. So what those kind of win rates look like is you're probably going to start out with a 50% win rate. And I started out with that, right? I would take a trade, I would win, and then sometimes I'd take a trade and I'd lose, right? And because we're scalping, we're usually risking more to make less. And so because of that, we need a high win rate to become profitable, right? And so if you have a low win rate, you're going to be losing money. And so that's where the beginner area is. That's kind of when you are still losing money, or you don't have a high enough win rate to become profitable, right? But as you learn, you will start to become profitable once you get into the intermediate level. And so the learning stages of trading will kind of look like a stair-step pattern. You'll learn a ton, you'll kind of hit a plateau. It'll seem like, okay, now I'm ready to trade, right? And then all of a sudden you'll break through another barrier. And so it'll kind of stair-step up like this. And so one thing will happen is at some point there will be a line up here where once you get past this amount of learning, this is where you'll actually become profitable. And that's what we want to get you to. We want to get you in this profitable area. And the learning curve for trading will always be like this. Even once you're profitable, you will always be learning more and more about trading. And so keep that in mind. Whenever you feel like you know everything, you probably are only just getting started with how much you can still learn and how much you can improve. And so that's why you can get higher than 80 plus win rate, because there is so much to master and there's so many little fine details that can improve your trading. So now let's look at some numbers. So let's say you're taking 4 trades a day and you are trading 1 contract. You should start out with 1 contract because to keep our risk low. And so once you start hitting that intermediate win rate of 70%, you are starting to become profitable. Now, just with 1 contract, it's not that much, right? But as you get better and better, you start to see the numbers start to get a lot higher, and you start to actually get a really decent income and a supplemental income once you start to get to 75, that higher level of that intermediate win rate. And so other than increasing our win rate, how do we increase our profit? We actually want to increase our contract size. We want to make this a higher number to increase our profits. Because the biggest thing with this strategy is we want a high win rate. And if we start to trade more to try and increase our profits, our win rate is going to go down. And so to increase our profits, we want to actually increase our number of contracts so that it will keep our win rate as high as possible. So let's say we switch to 4 contracts now, and you can see the numbers start to explode. Even with that intermediate win rate, you are potentially making 6 figures a year with 4 contracts. And so if you only have a 70 or 75% win rate, don't harp on yourself and be annoyed that you're not getting an 80 or 90% win rate. You really don't need that kind of win rate to be profitable with this strategy. You only need a 75 to 80% win rate. And then once you start increasing your contracts, the money will start increasing. And so that is the biggest thing when you're starting out. Don't think about number of trades, think about win rate. The biggest thing we want is the higher the win rate, the better we are going to do. Now, in terms of brokerages, we suggest using NinjaTrader. They have really small fees and pretty low margin requirement per contract. Now, if you can't use NinjaTrader, try and get a broker that has low margin requirement and low fees, because those are pretty big things to scalping. Now, in terms of other brokers out there, if you're outside of the US, I can't really speak on what's going to work for you. There will be people in the Facebook groups that might be able to help with that. And in terms of like brokerages like Toss, their margin requirements will be in the thousands. And so you won't be able to have a small account, and it will make it harder for you to start trading more and more contracts because you will start to have a very large account size. Now with NinjaTrader, you can start with a really small account. And so we suggest when you actually end up switching to real live trading, start with one contract and start with about $1,500. There isn't much reason to risk more than this because we don't want to put too much money at risk right away, right? Maybe you'll put this money in and then you will realize that you're actually not ready to live trade and you'll lose that money and you'll have to go back to sim trading. And that's part of the process. That will happen sometimes. And so in case you jump into live trading early, we want to risk as little as possible in case we need to jump back into sim trading and then sim trade for maybe a couple more months, and then you're ready to live trade. And so that's why start off with a small account and one contract. Now, in terms of when can you trade this strategy? So in normal market conditions, volume has a pattern throughout the day, with the highest volume being in the morning, the lowest volume being in the middle of the day, and then the medium amount of volume being towards the end of the day. And so this happens because in the morning, that's when all the day traders and everyone's starting to trade, and most people trade in the morning. And then come 9 a.m., that is midday on the East Coast. And so that is when a lot of the big banks and hedge funds, they're going for lunch and taking a break. And that's kind of when just volume kind of settles down for a while. And so the chart will be moving a lot slower. And so come after that, when they come back from lunch and you start to get towards the end of the day, time will start to pick up and the volume will start to go faster and faster. And so with this strategy, you can trade any time of the day. But just keep in mind, when the market is in kind of its normal movement, these are how these sections of the day are broken up. Now, when the market is selling off, this can just get thrown out the window. Any time of the day, there will be a ton of volume when the market is going crazy. And you can go and look at a chart for maybe an hour or two any time of the day and get 3 to 4 trades very quickly and be done for the day. And you won't have to maybe wake up very early and trade that morning hour session if you don't want to. Or you can come in at the end of the day and kind of trade later in the day as well and still get your trades. Now, one big warning thing is don't trade the last hour or half an hour of the day, because that's when big investment firms will make large bets and they can make the market become very volatile and sporadic. And so you want to be aware of that because that can change what happens in the market. And when we're trading, we are looking for predictable, methodical movement. And come the end of the day, that can sometimes change. And so we want to avoid that because that will affect our trading. And so with that, we're actually going to wrap up this section and dive into the strategy part of the course.